We have Anand Shah, who's joining us now, head of PMS and AIF investments at ICICI Prudential Asset Management Company. Anand, good to have you with us here. Thank you very much for your time. Is the view broadly at the the AMC and the alternatives desks largely similar, Anand, or is there a divergence? The reason I'm asking is because we've been speaking with the AMC team, and I've spoken to them recently, etc. as well, and generally it's the view is a little cautious because of the run-up that we've had, especially small caps, mid caps, and preferences now to sort of rotate into some of the larger caps. Where do you stand, Anand? Let's just begin there. We, by the way, recently had an instance of a mutual fund which had stopped inflows into a small cap scheme for a couple of months, which restarted it. I mean, just a testament to the fact that the market just has rallied on and money is coming in. Your thoughts, Anand?
Hi, very good morning. Pleasure to be here on CNBC. Thank you. I think the risks are increasing. I think there's no doubt in anybody's mind that liquidity is drawing into markets in general. Having said that, large caps do have a counter weight of FIs selling, and to that extent, the valuations and the sharpness with which the large caps have moved have been far more muted than what's happened in the mid and small. And within mid and small caps, there are umpteen number of examples where we can actually now see the valuations are just beyond what can be explained through fundamentals. So no doubt in my mind, or for that matter in anybody's mind in our asset management company, that risks are ever increasing with every such bout of liquidity flowing into the equity markets in general, and mid caps and small caps in particular.
Okay. By the way, Affle is one stock that's really gaining ground now. I think it's up 4% right now. Citi has initiated a buy on Affle with a target price of 1,600 on the stock, which is a big upside to the current market price. They talk about mobile ad budgets, which are picking up quite a bit across the industry and across businesses that are digital first, businesses that have omni channels, etc. So that will benefit Affle in a big way. Just wanted to point out that stock. Anand, hi, good morning. The big event is the budget, right? I know we talk about it a lot, and because that's our job pretty much, to analyze it threadbare. But from an investor standpoint, is there anything that this budget can bring about which could sort of change track for the market?
I've been saying this, that the budgets over time have been more consistent, and to that extent, the incremental surprises that come out of budgets have only decreased. And we believe there is more continuity of policies, more continuity of governance, or the direction of the economy would not change or alter significantly. Albeit, yes, we are looking at a couple of things which particularly for middle class, we can have some bit of simplification of the tax. Definitely that's one of that. And that also means that you might see a lower tax rate to support the weakness that we have been seeing in the consumption at the bottom of the pyramid. So I think there will be some bit, but on a broader level, I don't see the investments on infrastructure, the investments or the PLI benefits coming into further induce manufacturing, support the housing. I think this would be the pillars. Urban infrastructure, supporting housing, and supporting manufacturing, because all these three has a lot of potential to create jobs at the bottom of the pyramid. Because once we are able to sustainably do that, do more urbanization, then the consumption will anyways pick up. So I'm not too worried about consumption as long as we continue to invest in these three segments of the market which are generating jobs.
Hi Anand, good morning. And a couple of notes believe that the central government has enough ammunition to please all. So let's hope that is the case. We'll know in the next couple of weeks or so. Well, a sector that's gone quiet actually in the last 1 month or so is the steel, the ferrous space, steel, stainless steel. There's a lot of buoyancy, and suddenly the talk has gone quiet, and maybe monsoons, a bit of a slowdown in China as well. Now you have some holding. I think you'll have Tata Steel in there. You'll have a couple of those smaller players as well. The tier 2, so to call it, Godavari Power and Ispat, Sarda as well, and Jindal Stainless. What is your view on this space? You'll have got in at the right time, but now what's your view? Do you believe that what you're expecting is coming to play, or do you think some of these stocks have run ahead of themselves?
So if you see broadly, we are both positive on both ferrous as well as non-ferrous, but it's not, we all understand it's cyclical, and to that extent, there will be bouts of performance and underperformance. The way we are looking at differently this time is we want to be investors here. And when I'm saying we want to be investors, what I meant is we want to stay and give a lot of time to this sector and these companies because we're seeing something externally changing. As China becomes more prosperous, so China is the largest consumer of metals as well as the largest producer and the largest exporter of metal in general, particularly steel. And as it becomes more prosperous, it will have to decarbonize its steel making. That's happening as we speak in Europe, Japan, Korea. It would happen in China also, slowly but steadily it will happen, which means the cost of producing steel in China should structurally go up over the next 3 to 4 years. And China being the largest net exporter of steel in the world, that means that globally the steel prices should be, and applies to many other metals. And to that extent, that's a broad thinking that we have, that as China becomes more prosperous, many of these industries where there is significant pollution clamp down or decarbonization of steel making or the metals manufacturing happens, structurally the metal prices should move up over a 3 to 4 years.
Anand, I also wanted to understand, from you about the entire consumption space, because if this is a budget where you have some SOPs for the middle class, lower middle class, then there is a narrative that a lot of the consumption pockets could do well, whether it's retail, names like Trent, etc., whether it's telecom, names like Bharti, whether it is, e-commerce, names like Zomato. But these are stocks that have already rallied quite a bit. So from a consumption angle, how do you play the budget now?
So I think it's a most tricky one. Consumption is everybody's favorite, especially pre-2020. If you see, a large part of the rally was only in B2C stocks. So I keep on telling people that consumption is never a problem in this country. We have favorable demographics, rising per capita income. All segments of the consumption will do well. Some will do 5%, some will do 12%, some will do 20%. But consumption in India is generally a structural story, which also makes it more challenging for stock picking because none of the consumption stocks generally will find it very cheap. They're always expensive, given that you have a strong history as well as good future to look forward to. And to that extent, one will have to go bottom up. Within consumption, what we like and what we've been overweight is the services part of the consumption. We spoke about telecom, airlines, travel, leisure, hospitals. Those are the areas. Education, we don't have too much listed space out there, but these are the areas where the upper middle class and the rich will spend incrementally more. The products consumption, we have had the penetration. Services consumption, where we can see actually more penetration and faster growth than the consumer products companies.
Got that. The flash at the bottom of the screen, CESC, which we mentioned yesterday, there is a tariff adjustment higher which has taken place, which amounts to a hike, and it should be good to cover companies' incremental fuel costs according to IIFL as they are putting it out. So almost 4% gain on CESC this morning. The other one, of course, is Maruti, which is still up, which is up 4% now. So about 12,486 on Maruti coming through there. Anand, just talk about real estate and what you own there. Do you think, there is a large element of the price appreciation has been so large, right? That there is a lot of investor activity as well now. I was talking to a real estate consultancy and they were saying that it could be upwards of, in some markets like, for example, Gurgaon, etc., investor activity could account for 50-60% of a project sales. there are end buyers, so that is there. It's not as if, I mean, it's just all just sort of trading ownership papers, but there is a lot of investor activity now, and that's essentially what's led to this ramp up in prices very, very fast. Just your thoughts, and is that a risk as you see it, Anand?
Indeed. That's the bad news, if you ask me personally, because as I said, infrastructure investment, urban infrastructure investment, housing, and especially the households' investment in housing and manufacturing picking up, all these three are extremely important for the ultimate goal of urbanizing the country. So we have 65% of population in rural India, 35% of population in urban India. If you want to reverse that, and that's the way forward for India to go to 5 trillion to 10 trillion, I think we need all these three. And yes, this is a challenge. And that's why we need to do enormous investments in infrastructure so that the cities expand. And in the same breath, the builders actually can go out, acquire land, and build more out beyond the city centers where the price would invariably appreciate as the demand supply catches up or the demand outstrips the supply in that already developed area. So I think that's one big challenge. But we have examples like Ahmedabad, to some extent Hyderabad, where cities have expanded and the real estate prices have remained soft, relatively soft, and within the reach of the middle class and the households. I think that's very important. So that's where I continue to repeat that we need to continue to invest in the urban infrastructure, keep the real estate prices low, and that's very important. But I think what you're talking about, Gurgaon, to me is more of a exception than norm as we track. And you have to also see this appreciation is after 7 to 8 years of a soft real estate prices. So yeah, some bit of recovery in the real estate prices is given. But barring Gurgaon, I think the prices are not really shot up to worry as we speak.
Okay. Anand, thanks a lot for joining in and all the best. We'll, of course, touch base with you again post the budget. But until then, stay safe and thanks for joining in.